Welcome. We're back. Hope everybody had a good weekend. I hear fireworks outside literally right now. But yeah, late, happy 4th of July. Already said in the Discord. But we're back. It's a new week in the market. Really confusing going into the week. Not too sure what to expect yet, and that's completely fine. We're gonna find out pretty much in about 12 and a half hours. So yeah, we're just gonna look at a bunch of charts, talk about what I'm looking at going into the week. In about half an hour, I'll probably do ticker requests. But before we even get into like Bitcoin, which is how I usually start the stream, oil surging over the weekend. It's been surging for some time. But just looking at this CNBC article, oil jumping to its highest level in nearly 3 years after talks between OPEC or OPEC failed. I'm not even sure exactly what that is, but looking at all those oil stocks this week, seeing how they react to this, and I believe where was it? They're working on some sort of an agreement. I read somewhere that they do expect some sort of conclusion to be happening soon, but there always is a potential for anything. So everybody's talking about this, just bringing it up, do your own research on what's going on there. Moving back over to the charts, these are pretty much the futures, light crude oil futures. I mean, really ever since the COVID crash, but especially in the past month or 2 months, it's been pretty wild for oil. Just bringing that up. Let's talk about Bitcoin while people are hopping into the stream. Flat as well. Really it's not going to be easy to do this stream tonight because Bitcoin's flat, futures are flat. The market was green on Friday, pretty green as well. But a lot of growth stocks and meme stocks were getting crushed pretty much this month so far. Pretty much ever since July 1st or whatever the first day, I think it was. July 1st was what, last Wednesday? No, last Thursday. So Thursday and Friday were not too great for a lot of those, meme stocks and ARK type stocks. We go and look at the ARK ETF. It was down 0.80%. Last Friday, had a red day on Thursday as well. While if you look at the S&P and the NASDAQ, they were green on Thursday and Friday. So that's something I'm going to come back to in like 2 minutes. That's a very, very important point going into this week. But before we do that, Bitcoin, just chilling at 34K. It's been around this area for a while now. On the 4 hour, maybe it's starting to making higher lows. You have 1, 2 lows right there, and then potentially this could be another higher low, but also it's making lower highs. So just price consolidation or contraction on Bitcoin for right now within this larger 30K to 42K range, or this range has been in pretty much ever since the middle of May. But that's really it for Bitcoin. We'll see. At this point on Bitcoin, it's just the price action has to come first. It could go either way. But in my opinion, it's just I want to see which way it's going to definitively break to before I say I'm, short-term bullish or bearish on Bitcoin. Long-term, I still am bullish, but it did have an insane, markup over the last 12 months compared to where it was a year ago. So you can't complain even at 34K unless you bought up here towards February and March. That's really it for Bitcoin. Let's talk about the market now. And I was saying I was going to get back to this in a minute. We're seeing a little bit of rotation out of those growth meme highly shorted stocks, from the Wall Street Bets Reddit stocks to the Clover and the Wish, and even some EVs and pot stocks got hit on Thursday and Friday. Those are the types of stocks that a lot of retail traders like myself are in. Back in really January of this year was an amazing month for all those types of stocks. That's when we had the original crazy squeezes on GameStop and AMC, and Fisker went up to 30 plus, and everything was going insane. All the SPACs were super hot back then as well. And then I'm sure many people here know in the middle of February is kind of when a lot of those types of stocks found their highs, or for at least for right now, their highs, and they corrected pretty much up until May 12th, May 13th, and that May 13th and the 14th was pretty much the bottom for a lot of those types of stocks. They ran all the way up until the end of June, and then on Thursday and Friday, the first 2 days of July, those types of stocks, they pulled back. A lot of them got hit pretty hard. AMC got hit pretty hard. Clover got hit hard. Wish. Haven't really looked at too many other EVs, so I'm sure we will later on in the stream. But these are names that I talk about a lot on stream, not only because I trade them personally quite a bit, but also a lot of the people who watch my streams trade these types of names. And last week started off amazing for me. Monday and Tuesday, and even I think Wednesday was really good. And then Thursday and Friday were just the complete opposite. So a lot of people are coming off of a rough close to last week, like myself. because we kind of got the reverse of what we've been seeing pretty much from May 13th to the end of June, where a lot of those names were doing well. So going into this week, the big question for me is, are we about to see another huge drop on those types of stocks like we did in February? Or was it just a little 2-day pullback? Because to be honest, a lot of those types of names have had an insane runs throughout the past month and a half. So I'm definitely looking at a lot of those names. We're going to talk about a lot of them as well. But if you look at the S&P and the NASDAQ, and the Russell was right on Friday, but if you look at tech and the S&P stocks, I think even the Dow Jones was green. Yeah, like, you know, the major indices were up. It was really the small caps and the growth stocks that were down. So looking at the S&P 500, this is 1, 2, 3, 4, 5, 6, 7 days in a row, I believe, that the S&P consecutively closed at all-time highs, which is very impressive, to say the least. We even gapped up on Friday. At this point on the S&P 500, you're just now getting overbought on the daily. The MACD is still green. The momentum is still positive. You're not too overbought. I'm still bullish on the S&P 500 short term. Historically, when your RSI does get overbought, you do see a pullback, but it can take weeks for that to occur. And it might also underperform just because of how fundamentally bullish a lot of stocks are acting. If we look at tech, a lot of tech stocks are pretty overbought. If you go down to like the 4-hour chart and so forth, like if you look at the NASDAQ, it is, this is the highest RSI level on the NASDAQ since September of last year, and you could see how horribly that went. So this is, the highest we have seen tech stocks in a long time. And historically, we should see a pullback. I don't know exactly in how long, but historically, every single time you could see the RSIs come up to this level, there has been a pullback. So it's just not really a question of when or not. It's not really a question of if, but when. And that could be tomorrow, that could be in a month. There's no need for me to time it. I don't know when it will be exactly. But I'm kind of at this point just kind of putting my hands back when it comes to a lot of tech stocks. Their RSIs are very, very overbought. I don't think they're going to crash. I just think you could see a pullback soon on some of the names, maybe like Tesla and ROKU that have been running crazy very, very quickly. But also a lot of other names are just now breaking out of major ranges that they've been in since September, way back, like over here. So if we go and take a look at Apple, for example, it just broke out of a major resistance. This 137 level, it just broke out of that. Apple is technically right now, Apple is only 2% higher than it was last September. But during all of that, you made higher lows. So it's this interesting situation where you are certainly getting overbought on your RSI for tech stocks, but a lot of them are having major breakouts because a lot of large cap tech stocks kind of just did nothing from September up until June, So if we go and take a look at Amazon as well, right over here, Amazon, it still is not at the same level it was in the beginning of September last year, but it certainly is much higher than it was in the beginning of June. So we're seeing this situation where a lot of tech stocks are finally waking up after like a 7-month period of just doing nothing. But they're doing it very, very quickly, which makes me think maybe we continue this rally for a lot of tech stocks, but maybe we see a pullback before we go higher. Because if you look at something like Microsoft or Roku or Tesla, which all three are very, very extended, like they're really extended. The RSI on Microsoft is the highest it's been since August of last year, and it certainly did pull back 16% the last time the RSI was here. If we look at Roku, the RSI already did correct. Roku already pulled back. We talked about this bearish harmonic. Cheddar Freeze brought it up last week. Mitch Ray was also talking about it. I charted it for the requests, and Roku started pulling back. Tesla still is just in this little symmetrical triangle, or you could even call this a bullish pennant because it is after a run up, and it's actually completing this pattern out rather than just having a premature breakout. So yeah, looking at these stocks is very, very interesting. If you look at tech, if we look at the Dow Jones now, getting up to a little bit of a choppy area where it has topped out 2 or 3 times before. Over here, one random day it spiked all the way up here, but then it really did pull back, and then it topped out here as well. So it's a very, very interesting time for the market, honestly. Any change for the 10-year notes? Not really. For the dollar is back above that 92 level, which historically, if you can hold above this level, it has a lot of room to the upside, which again, historically would not be great for equities and crypto and other, tradable securities. So yeah, and on the flip side from tech, we have, the small caps and the ARK, which are coming off of a pretty rough Friday. The Russell 2000 was down 1%. ARK ETF was down 0.80%. So, just looking at all these charts, which I haven't even looked at them over the weekend, we're just kind of in a situation for the market where when it comes to tech stocks, they're very, very short-term overbought, where historically at these RSI levels, they do see pullbacks. But also on those tech stocks, they're making huge long-term breakouts, which for most of these stocks like Facebook and Apple and Amazon and Microsoft, all they've really done is make higher lows and create new all-time highs since most of their IPOs. So these types of breakouts on those names are very, very real. And these are the best companies in the world. They make more money than any other companies. So for them to be breaking out is, important. And what we're seeing on the flip side is those growth names and SPACs. Well, SPACs actually had a decent week last week, I think. But a lot of those meme stocks and growth names are coming off of a pretty rough 2 days to close out last week. So, we're going to look at some of those charts as well now. But that's just really what the market looks like going into the week. Will we continue this rally for tech and also pull back for meme stocks? Or will we see a tech pullback because the RSI is overbought? And will we see these meme stocks bounce back up because their 1 hour charts are oversold? There's just so many different potential scenarios. I don't want to sit here and try and, predict everything. I'll just wait to see what the market looks like tomorrow and just see where the bears are, where the bulls are, and where I can kind of align with the bulls. So yeah, we're going to talk about Clover now. After that, we'll talk about, we'll start off with Clover. After Clover, we're going to talk about Wish and SOFI and AMC. Then I'll just recap the ongoing trades really, really quickly. Most of them pulled back on Friday. And yeah, Friday was one of the worst days for the swings in a while. So definitely going to look at a lot of these trades. After I look at these names, I just want to kind of talk about, in about 10-15 minutes, we'll probably just take requests for the rest of the stream. So yeah, we're going to do Clover in a second here. Before I do so, we got 37 people in here now. Make sure to hit that like button. Let's get to 20 likes really quickly. If you're not subscribed to the channel, we just hit 2,600 subscribers, so hit that subscribe button. Appreciate all the new subscribers, and also make sure to join the Discord. The link is in the description. We're closing in on 1,900 Discord members, which is awesome. A lot of amazing people you can meet in the Discord that are like-minded traders, and there's a lot of things you can learn in the Discord, so make sure to check that out. The link's in the description. And yeah, let's talk about Clover now. Actually, let me read the chat because I haven't looked at the chat at all, and I haven't streamed since Thursday night. So let me look at the chat for a second, and then I'm going to do Clover. Thomas says, here, study. You're in the right place. Jordan says, almost forgot the like. It's been a long weekend. Yep. What's that indicator above the RSI? This is called the MACD, Moving Average Convergence Divergence, my favorite indicator. If you go to course video number 8 on my channel, it explains both the MACD and the RSI. That's under the playlist on my channel, and then I'll say free trading course, beginner to advanced. What's up, Chatter Freeze? Joe says, one of the best stock TA channels in my opinion. Really appreciate that, Joe. I try my best. What's up, Shelby? Chatter Freeze says, I'm writing a thesis on the market for the Discord. Some interesting things going on with the yields. Absolutely. We have a lot of great analysts in the Discord, very well educated people. A lot of people that have been in this market much, much longer than me, decades longer than me. So it's not just me. Like, there's so many other people in the Discord that can help everybody out. And it's just a great community. So yeah. And yeah, let's get to Clover now. Let's talk about the charts for a little bit, or for the most of the stream. Clover, yikes. Very, very rough day, both on Thursday and Friday. So I put this out probably on Tuesday last week, the day after I put out this trade. So I put this out on Tuesday. On Wednesday, it went up 10% intraday, and it went all the way up to about 1420-ish. And then it just dropped for the rest of the week. And it was a pretty rough drop from the high that we made last week, or, this area, to the low. We dropped about 20%. That's not really something I can anticipate. A 20% drop within 1 week from the high to the low is pretty extreme. But also it still is at a higher level than it was in the beginning of June. So it's all relative. It was at 28. It was also at 6. It's kind of not really in the middle, but it's made a 78.6% retrace, and it's potentially trying to double bottom there. It was a little bit shy of creating a bullish pin bar on Friday. You would definitely have had to close above like 1190 to get like a bullish pin bar. So it's a decent candle. You know, we came down to that 1130 area, and then it just kind of bounced up for the rest of the day. If we go down to that 1 hour, why did it bounce here at that 1130 level? There's definitely a few reasons. Number one, it filled a gap from June 21st. Number two, that's a historical area. It was the lows in like June 21st. Came back to that same level, bounced off of it, and then also, I think I have it on my 30-minute chart. I might have deleted it. I did. Have a little bit of a butterfly here. So if we go like this, came right down to, I believe, that 1618. Close, you know, it was close. So a little bit of a butterfly there. Also had some 1 hour or 30-minute classic bullish divergence. If you're in the Discord, I did share this harmonic. I think in the Swing Updates channel, but also in the premium chat. Like it was definitely dipping. It was like the first hour of the day on Friday, and I said that 1130 level is a gap fill and a harmonic PCZ. I sent that like 10 minutes before it got there. And then it went down to the 1130 level, and that was the low of the day. It eventually did, which is also a pretty cool sign. I don't know if it's a sign, but it broke above the VWAP. This is pretty much the first time that Clover closed above the VWAP on the 30-minute, or closed multiple candles above it in like 2.5 days. So it ended up reclaiming the VWAP. That's a good first step, but in terms of a swing trade, it doesn't mean much. You know, the VWAP is really meant for low time frames. If we're talking about the actual swing trade ID on Clover, there's not much to that. But hey, on low time frames, you broke a supply line, you broke above the VWAP, you have classic bullish divergence. That's all great. We already saw a bounce. You were even at, you know, a pretty oversold RSI level where historically you were due for a bounce, which is something I also did talk about last week. But what I did not foresee last week was a drop from $14 to $11 in like 2 days. You know, that definitely took me by surprise, definitely hurt me. But again, it's a trade. A trade's a trade. We'll see what happens this week. It's all about holding like 1130. That was your low from Friday. That was near your lows from June 21st. Staying above 11 is pretty much what's most important on Clover. It did get stop hunted. There, you know, closed one on the daily. It closed 1 cent above the stop ID I had. But we'll see what happens. You know, I still personally am in Clover. That doesn't mean you have to be or you should be. You know, always make your own decisions, follow your own risk tolerance. We've had great trades on Clover before. We've had bad trades on Clover before. So you never know what this will turn out into. But yeah, it's very highly shorted. The cost to borrow, or the fee for borrowing, is like 70% or something crazy. The short interest is like 37%. It's really in a situation right now where big money is betting against this very heavily. They're shorting it. It's very, very obvious and clear on low volume. And I think somebody shared earlier in the premium chat that there was like a lot of puts also that came in on Friday. So there's a big battle going down on Clover. We'll see what happens. And yeah, that's that for Clover. Hopefully it starts doing a little bit better. But also I think, I forgot to mention this, I think tomorrow, don't quote me on this, do your own research, but I think tomorrow might be a lockup expiration for Clover, which is debatable because I read some sources that said it really doesn't mean anything because there's a lot of shares that require to be above like a certain price and they're Class B, not Class A. I really just look at the charts. I don't look too much into that, but that is something that definitely can explain the drop last week, and also something that could be a risk going into this week, depending on how that works and how they have filed, you know, that lockup expiration. So, you know, definitely do your own research on that. That's an important thing. Don't want to ignore that. And we'll see what happens tomorrow. Moving on, AMC did actually have a bullish pin bar on Friday. It broke under the $51 support that is held since June 14th for about 2 weeks or 3 weeks. AMC broke that, came all the way down to 47.77, and then had a huge bounce, which also led a lot of other meme stocks to have a bounce intraday. So somehow AMC got saved by the bell, closed above 51.39. All you need to do on AMC is continue to close above 51.39. It has closed every single daily candle above that since June 14th. That is the bottom of the range. You got to continue to hold that. If it doesn't hold that, from a technical standpoint, it gets pretty ugly. So if it doesn't hold that, your next major support's like $40. So, and again, this is a technical, I'm talking about technicals here. Obviously there's a lot of, I'm not even gonna say fundamental, but just bullish sentiment on it for, I don't know the word to use, for meme reasons, there's a huge community behind this, obviously, and definitely, we have seen many instances where AMC can dictate how a lot of other meme stocks do. Same thing for GameStop. The 4-hour hidden bullish divergence is not currently developing, but is still possible. Probably will confirm at some point, as long as it makes a higher low than $12, which I'd say there's about a 95% chance it makes a higher low than $12 before running to whatever amount again. That's really it for AMC. If it can continue to hold above 51, there's still room up to 65. I don't really touch AMC, but it's definitely, tradable as long as you can follow your risk. So make your own decisions there. Wish, this is a very, very popular name. I think it was last Tuesday. It was either last Tuesday or Wednesday where I put out a tweet saying Wish was at a make or break area. I streamed the same night saying there are bearish technicals on Wish. Again, like I always say, I have to read charts and I have to be unbiased. I knew there was probably going to be some backlash for me saying there's bearish technicals on Wish because people want to get married to trades. I don't want to do that. I talk about what I see. It's all probability, none of it's certainty. And last Tuesday and Wednesday, I talked about the bearish technicals. I said it broke out of a rising wedge. I showed the 4-hour hidden bearish divergence. I showed the daily hidden bearish divergence. You can go back to, it was either Tuesday or Wednesday, I think, but you can go back to the stream. I said it looked pretty bearish in terms of technicals, but the sentiment was still very bullish, which ended up not mattering for a couple days. And it pulled back. It had a very rough pullback from 15 down to 1144. At this point on Wish, 1-hour MACD is waning, which is good. I think there's also, I did chart it. Why is it not on my 1-hour chart? So if we go over to the 1-hour on Wish, there's actually a bullish cipher. It actually hit the 786 PCZ and bounced 5% off the pattern completion zone. I also tweeted this out last Friday. So we went from bearish technicals on Wish to now potentially a good 1-hour chart, but you still do have the bearish divergence on the 4-hour and the daily. And it's at an area where you're, in terms of the inverse head and shoulders, we've been talking about this for like weeks now. We've been talking about it ever since it was at 11 back in like the middle of June. And a lot of people are now bringing this up again on social media, this inverse head and shoulders idea for Wish. It's still possible. Typically you want to make a parallel, or at least like a little bit of a higher low from your left shoulder to your right shoulder. It did make a lower low. It's not too deep under that left shoulder. It still could be looked at as one, but again, when it comes to structural patterns like head and shoulders and cup and handles, it's not a real pattern until you actually break a neckline. And to break a neckline on this pattern, you need to get above 15. So, good luck. I'm rooting for everybody who's very bullish on Wish, but I could see going either way still. I've been saying I'm neutral on this for multiple weeks now. I've been in and out of it a couple times, made some money, lost some money. We'll see what happens. And a lot of people here are looking at this one. And yeah, we'll see if this can finally reverse out of a downtrend. But the issue is the MACD did cross over to red on Friday, which confirms hidden bearish divergence on the daily. This is not me saying this. You can look at textbooks that talk about divergence. Hidden bearish divergence implies a continuation of a downtrend. It is in a downtrend. You're getting your continuation of the downtrend in the long term. So what you'd have to hope for here on Wish is a short-term reversal that cancels out this bearish divergence, and then in turn allows you to retest 15 and hopefully one day break it. And what could allow for that? A very, very bullish sentiment on social media and from retail traders. So it's really just a battle between technicals, which are currently winning, and sentiment overall. And at some point, I hope all the bulls can rally this back up. You can get a MACD crossover back over to green on the daily, and then people can go to the moon. But we'll see. At this point, I think $11 is like the most important level to hold going into this week. And to be honest, there's not much resistance from 11 to 15, so that's a good thing. And you also did bleed on low volume, which is another good thing. So there's good and bad on Wish, just like Clover, just like AMC. It just depends on where the price action goes to. I want everybody to make money. So from just like a personal standpoint, I wouldn't say I'm like super bullish, but like I'm hoping that it goes up so that people can be happy. You know, I'm not one to really ever discourage others from making money. That's not what I do. I always hope for the best, but I have to be unbiased when I look at charts. So again, neutral all around, but I hope it goes up, if that makes sense, for other people's sake. Finally, SOFI. SOFI is pretty interesting here. This, I don't know if it's going to be a swing, but this is one of the more better looking swingable meme stocks, which it only really became a meme stock like last week after that lockup stuff. It started trending on Wall Street Bets, but SOFI was heavily shorted when it was IPOE merged. A lot of retail traders are very bullish on SOFI. A lot of big money is very bullish on SOFI. They've talked about it many times. Even last week, they talked about it many times on CNBC. They had a lockup expiration. It gapped down or whatever, and then it gapped back up like on Tuesday. I was actually in it that day, doubled my money on options, got back out. Now at this point on SOFI, look at this. Hidden bullish divergence is possible on the daily. It's also developing pretty nicely on the 4-hour. The only thing is, it could be looked at as a potential bullish bat, but the PCZ would be down at like 1530-ish. So that's obviously $3 lower. I don't know if it gets to the PCZ. You still have the 1750 support and like the potential double bottom formation if it can hold above last week's lows. So, I'm definitely looking at SOFI is on my watch list. I'm not in it currently, but it's on my watch list this week. If it can start bouncing right away tomorrow or even Wednesday, maybe the hidden bullish divergence confirms and I might put out a swing on it. If it just can't, then I'll just wait probably until lower levels, because I think Scott Carney talks about this. I learned it off of watching Mitch Ray's stream, but the bat action magnet movement or whatever, like the BAM, where on a certain bat pattern, when you break that B point, there is a much higher likelihood of you eventually going down to the 886. And it's even like you could even potentially like trade that. Like he talks about how you could, and again, it's not financial advice ever. I'm talking about other people's findings, not my own. So I might be interpreting it or a little bit incorrectly. But if you have a harmonic that has an X, A, B, C, and then from C down towards your D point, you break the B point, right? So on this move right over here, once it finally broke this B point, the probability of it going down to the D point significantly increases, if that kind of makes sense. I probably messed that up a little bit. I'm still, trying to refine different types of, or how to even put it. I'm still, always trying to learn more. So that's just something which could occur, but it's all about that 1750 area holding, which is also a gap fill. So yeah, that's Clover, AMC, Wish, SOFI, 4 names that a lot of people on social media and Reddit and whatnot are talking about. Just want to get them, covered. Now all I got to do is talk about the ongoing trades. After I do that, I'll look at the chat again, and then we'll do ticker requests. So really rough day for the swings on Friday. Like I talked about earlier in the stream, a lot of these types of stocks are just getting hit from the past 2 days in the market. So all of them are pretty much down, unfortunately. I mean, there's only 3 or 4 that I need to talk about, but still, it's not nice seeing a new swing being down 9%. It's approaching that area where you really want this to bounce. That 736 level was the low, and the PCZ. It was the low from June 20. What was it? Yeah, it was the low from June 21st and the PCZ of this somewhat bullish butterfly, the 1272 from XD. So for EDU going into this week, you just want it to hold above 736, break out of the supply line, and then who knows how high it can go. There's still a gap fill to the upside. It's all about holding above and closing candles above 736. CGC, it has to reclaim 2414. That was a major important historical level. It has to get back above that level. Very, very important historical area. I don't need it, but like I would love to see CGC reclaim that $24 level. And hopefully not get stopped out. But it's just a lot of pot stocks pulled back on Thursday and Friday. It's just like sector wide, so it sucks. But again, after a very, very good June, even really good second half of May, you're going to get pullbacks, after pretty nice moves. If you look at May 13th right over here, May 13th up until the beginning of June, it went up 25%, which a lot of pot stocks actually did underperform a lot, like EVs and like other things that bounced up from May to June. So we'll see. ALLO, profit, let's go. It's up almost 7% after getting slap punted. I think it was last week, maybe the week before. Any close above 25 on ALLO looks pretty bullish to me. Everything here is good for right now. Not much to update there. Finally, PSTH, it didn't even move on Friday. It closed down 0%, or it closed at 0%. It's still above that 2220 level. It just has to continue holding above that. So yeah, that's the outlook going into the week. Nothing too crazy. Still got to wait for a lot of price action, a lot of confirmation. Still a lot of questions to be answered. The MP3 fish, I like the name. Also, thank you for the subscription, appreciate it. So yeah, going into this week, tech stocks are having major long-term breakouts, but they're also short-term overbought on the RSI. Growth stocks and meme stocks are off of a 2-day losing streak. Hopefully they can bounce back, but you never know. We saw a 2-month drought for those types of stocks from February to May. So a lot of questions to be answered this week. That's why we're trying to prepare getting into the week. On Saturday, I did a scanning stream in the Discord. Understandably, I think there were soccer games on. Also, a lot of people went on vacation this weekend, spending time with family. Not that many people really showed up, but I was able to scan and sent out the watch list. So we'll see what happens. There definitely are some charts that look pretty interesting. If anything confirms, maybe I'll put out some news links. But again, not trying to force anything. So that's just my mind going into this week. We're coming off of a good 1.5 months. I was going to say 1.5, but that just sounds weird. So, just got to wait for a good opportunity to arise. And then hopefully we can be on the right side of the ball when that opportunity does present itself. So that's really it going into the week. Now we can do ticker requests for the rest of the stream. Let me just see if I missed anything in the chat. Doesn't look like too much. Oh my gosh, yeah, AHT reverse split. For people in that, sorry. I mean, I'm not sorry, but like I'm sorry that, how do I put this? I'm just so bad at speaking. I don't even know how I stream. I'm sorry that it's doing what it's doing. I didn't put out any trades on it or anything, but it, the reverse split definitely hurt a lot of people. So for those people, hang in there. Definitely very, very tough pullback. I don't know what the reasoning behind that was. I think I saw somewhere on Twitter that they've done this before, like not too long ago. But AHT after hours was down 27%. It went down pretty much $1 further under this. It went down to 289 to close after hours. Which that's horrible. I was in AHT like 2 weeks ago or something. I got out of it because it broke a support, so I wasn't in it on Friday. But it came all the way down here, broke the 200-day moving average after hours. Hopefully, you can at least close above that tomorrow. But I have no clue. And I was talking about this level on AHT last week, that 427 level, and how important it was to hold. It broke that even before the announcement of the reverse split. It broke that during the day on Friday during market hours, and then obviously it was already under that major historical area, and then with the reverse split came all the way down to 289. So yikes there. But yeah, we'll do take requests now. Make sure to hit that like button. Let's get to 30 likes right now. Hit that subscribe button if you're new to the stream. Basically right now I am going to look at tickers for all of you in the chat. So if you're requesting something in the chat, please don't request something that I IPO'd like 2 weeks ago. I need something with the data on the chart to analyze, because I don't fundamentally understand every single company in the entire stock market. So I have to only look at the charts for most of these. I can't spend time, doing due diligence on every single one midstream. Also, nothing I say is financial advice. All this is just probability. Technicals are not certainty. So take everything I say with a grain of salt, do your own research. And then finally, don't request anything that was up like 30% or more on Friday, because that's just not how I trade. I'm not really a momentum trader. I just like, consistent swing trades in potential value areas or value perceived areas. So yeah, let me start adding some of these tickers to my watch list. We'll see how many tickers we got. Probably do this for about half an hour unless I get tired. But I am pretty charged up going into this week. I'll explain a reverse split. So it's basically the opposite of a regular split. So for an example, on a regular split, if it's a split of 10, let's say you have a $500 stock and it's a 10 split, the stock price will pretty much go down to $50. But the company doesn't technically lose $450 in stock price. They're just kind of changing the amount of outstanding shares so that they can have a more attractive stock price, which was definitely something a lot more helpful back when fractional shares were not so huge for retail traders. I know there's still a few brokerages that don't even provide fractional shares. So that's what a regular split is. Reverse split's the opposite. It's pretty much, you can have a 10 to 1 or however you say the ratio. It's either 10 to 1 or 1 to 10. I don't know what the actual split on AHT was, but we're basically, let's say you have a $3 stock and it's a 10, it could go up to $30. And I'm not actually too educated on why they do that. I definitely understand regular splits more than reverse splits. But again, Google, I think it's a great answer to that. It's a pretty simple thing. So yeah. Gonna keep it to 1 ticker per person for right now, just to make it fair and for time purposes. And yeah. All right. So we got Microsoft, Roku. Tesla, I mean, again, I'm just trying to keep it to 1 ticker per person. We already kind of looked at it. It's just in a symmetrical triangle right now. I can see going either way. Sorry if I just screamed in the mic right there. Didn't mean to. What was the last one? CVS. Did I put that in? Did I put CVS in? Why is it not showing up? I don't know. So we had T-Mobile, CVS, Disney, CLSK, Palantir, TSM. We'll look at the QQQ first. Drew, we already looked at the NASDAQ, but I don't think we looked at the QQQ. On the QQQ, I thought it looked pretty bearish on Thursday. It broke this demand line. It had classic bearish divergence. The 4-hour RSI was at a pretty high level, where historically once it gets up to that level, it has reversed multiple times in the past year, but also historically, like every time it's been up to that level, it's also pulled back. So it just keeps going. It's just kind of continuing to go up on low volume. It's just kind of floating. The word I've been using for a lot of these is just they're on autopilot. They're just continuing to go slightly higher and higher, closing at new all-time highs like every day on pretty low volume. You gapped up on the QQQ on Friday. Who knows? You could use Fibonacci. It's almost at the 1618 from your previous swing high to swing low. That 1618 golden ratio resistance is like 359, which is only like 50 cents higher. We'll see if it pulls back at that. It's just, it's been overbought on the RSI for, a few days now, but it's just continuing to go up. So it's just a question of when, and I don't know exactly when you're going to see the pullback, which I think will occur at some point. It might just be like a mini pullback to reset the oscillators, continue running. So yeah, just overall groups into what I was talking about with tech earlier in the stream. Yeah, Intel number 1. I think anything above 56, and I've been saying this for a long time, but it's the important level. 56 on Intel. It's definitely underperformed a lot of other semis this year for definitely fundamental reasons, but also 56, right? It's low from over here, low from over here, low from over here, high from right over here. It's a very important level. It's back above it. You are trying to make your first higher low on the daily for Intel since like March of this year. So there is some 4-hour hidden bullish divergence currently playing out. I'd love to see Intel get back above 59. If it does, there's room to 62. This is not an actual trade, it's just from when I was scanning over the weekend. But yeah, I think Intel if it can just hold 56, which again it's kind of walking a thin line right here, but if it can just continue to hold above it, it could be at a pretty good area for a long with a low risk. But again, it comes down to how you manage your risk. That's, you know, a personal thing. LAC, did it fill that gap? Yes. So wow, look at this one day. It looks like it gapped down, filled the gap, and then it just ran back all the way to like 15 bucks. It's continuing to find support at the 200-day moving average. It's closed every single 4-hour candle above the 200-day moving average since the 22nd of June. It's also kind of pretty much closed every single daily candle. Maybe this day was like a couple cents under, but it's using the 200-day moving average as support. LAC, it is in the middle of a support and resistance. Your resistance is like $16.72. Your support is $13.16. There is also some hidden bullish divergence on the daily. As long as you continue to close above the 200-day moving average, definitely has room up to a minimum of like $16.70. If it breaks that, then $17.70, and then after that it could go crazy because there's not much resistance after that. So really you just want to continue to hold the 200-day moving average. If not, then you want to make sure you hold above 13 on that one. MP, kind of like an inverse head and shoulders, not perfect, but something like this. Looks like it's trying to break out right now. So now there's a gap fill to 44.51. Any close above 37 bucks looks pretty good here. Eventually classic bearish divergence is possible. On the daily you made a higher high with a lower high on your MACD. So even on the 4-hour, classic bearish divergence is still possible. It's not confirmed yet. So we'll see what happens there. It's at a make or break area. Bark, there's not much I can do on this one. I don't even know if it's a SPAC or not. What's going on here? It looks like it's finding support around 9.90 to 10 bucks. Resistance is 12.33. There's not a lot of data on this chart. I don't see any divergence on the daily or the 4-hour. I don't see a pattern. There's not much I can see going either way, but I don't know what this is. Microsoft, it is right at the 1618 golden fib extension. Go over to the 4-hour. Could this be? Could be pretty much a bearish crab. So it was a failed bearish. So bearish failed Gartleys can turn into crabs because you have that 618 from X to B. This could be pretty much because it's at the 1618 from X to D, but also almost at the 3618 from B to D. The triple classic bearish divergence did not confirm. It just went back up again on Friday. It kind of reminds me of ROKU, which is the next ticker, like last week. You know, it's at a pattern completion zone of a bearish harmonic. There isn't much bearish divergence. I mean, there's a potential for it, but it's not really confirmed, and your momentum is increasing. So definitely, it looks short-term overbought to me. I definitely could easily see a pullback on this one in the short term, but long term, still higher highs and higher lows. One of the strongest stocks in the world historically. It's a beautiful chart if you just zoom out, right? It's just if you zoom in short term at these levels, it's typically when you're at, you know, this high of an RSI every single time you pull back at some point in the near term or short term. But again, it could just, even with the RSI, like something like this could literally reset the RSI, right? It's a moving average convergence divergence. So like literally like a pullback like this could reset the RSI, and then it just goes again, and maybe it shows hidden bullish divergence, right? So just because the, you know, on a lot of these tech stocks, I'm saying the RSIs are at levels where you reverse, it could just be like a 2% pullback that can reset the RSI, and then it runs again. That's all I'm saying. You know, it could be much more, it could be much less. There's no way, an RSI can't tell you how much something is going to dip, but it does tell you with a pretty strong probability that these are areas where you see some sort of a pullback in the short term. Every single time that's been, I mean, it has gone higher for sure, but, you know, in general, above that 70 level is when things get a little bit riskier, or maybe just a little bit of a pullback, you know. But doesn't mean it's going to happen for sure. It's continuing to close at all-time highs every day. It's very, very strong right now. The buyers are there. So it's just a question of how long the buyers will continue to bid up the price. That's really it. ROKU got up to a pretty, you know, overbought territory with the pattern completion zone, and it pulled back. Unfortunately, on Friday, it closed under 432 or 433, which is what it was trying to hold as support from that previous level over here. It can easily reclaim. It doesn't have to get much higher to reclaim that level. If not, then 400 is your closest support. I don't know if that would also line up with the Fibonacci level. It would almost line up with the 50% retrace as well. So I don't know how much it's going to pull back, but this is what I'm saying. Like I was talking about on Microsoft, your RSI was at a historical level where you see pullbacks. It pulled back and the RSI is reset. But in reality, it was from the high to the low on Friday, it was like a 7% pullback. It wasn't like this thing crashed. It was a real pullback, but after going up 40% in 2 weeks, can you be surprised that it wants to pull back 6% when the RSI is like at those levels? You can't be surprised with a bearish harmonic. So, DM, kind of like a multi-level range. It's at the final support. I mean, under this, you still have like what, 1020, but that's, another what, 5-6% down. Yeah, 6% lower. So if you break 1082, which was kind of your lows from like 420, you break that, then you got like 1020 from this low and this low. If you can bounce off of this, your resistance is $11.60. I don't see much of a pattern, or well, on the 4-hour classic bullish divergence is possible, but you need your MACD to cross over to green. Kind of like the same thing for the daily. It's not really developing yet or close to confirmed yet. Viacom, anything above 43 is bullish to me. Maybe a little bit of bearish, classic bearish divergence on the daily is developing. That could, allow for a retest of 43. That 43 level is a historical level. It was your resistance for the last 2 months. It's the 200-day moving average. Everything comes down to that 43 level. If it can continue to close above that could lead to a great rally on Viacom, right? It got dumped with the whole entire Archegos Capital thing. Between 43 and 53, there's not a lot of resistance historically, right? Straight down, straight back up. Straight down, straight back up. You know what I'm saying? So it's in this zone where you can see a continuation very easily. You just got to hope that this potential classic bearish divergence developing underperforms or never confirms. BFLY, down 10%, down 11% on Friday. I don't like that it closed under 1291. That was kind of your lowest from 420. It also broke this support at 1320-ish, which was like a 2-week support. So on this one, I'm not too sure. It definitely looked like a cup and handle. It was in this range, but it closed under the range with the confirmation. Again, this can be invalidated if it just closes back above it tomorrow or this week at any point. Nice 4-hour bullish pin bar to close out the day. A little bit of a bounce there. You got to get back above 1320 on Butterfly. That's really what it comes down to. The MACD, it did cross over to red. It just kind of rejected a resistance in the 200-day moving average, and it broke support as of the close, but again, you have to hope that just reclaims it. MRVL broke a supply line, went crazy. Was this all-time highs? I believe this should be all-time highs. I'm not too sure here. I mean, I don't think it would be at a PCC of a bearish harmonic just yet, but maybe like a bearish butterfly in development, but again, it would have to go like a lot higher to hit the PCC there. MACD is losing some steam on the daily. RSI was overbought, pulling back a little bit towards the end of last week. This could turn into a bull flag. I think really on this one, you just want to continue to hold above 55. That was your previous highs in the beginning of the year. It was also like a 3-day resistance on June 16, 17, 18 to like the 20th. You just want to continue to hold above 55. That's your support. You just want to hold above that. If you break that, then you got 51 next. In terms of resistances, probably just use Fibonacci because it's at near an all-time high. It's already exceeded the 1618. Again, it can continue running, but it has to hold above 55. Sorry I haven't been reading the chat that much. I'm just trying to get through this first round of tickers because there's quite a bit. But yeah, CHWY is next. Just messing around with the 200-day moving average. I could see this one going either way. It's in between support and resistance. I don't see much of a pattern. I'm neutral on that one. Could go up, could go down. I have no probability leaning me towards either direction looking at this chart currently. ATIP, not much I can do here. No pattern. Maybe some classic bullish divergence, but it's having a little bit of issues confirming it, getting the MACD over to green. That's really all I can do there. I think we looked at this last week, same thing, nothing's really changed. It pulled back 4%. I don't know anything about the company and the chart. There's just not a lot for me to work with on that chart. XL is next, pulled back. Again, you know, a lot of these types of stocks that just had a very good rally from May 13th to the end of June, you know, EVs and pot stocks and meme stocks and just a whole list of growth stocks. They're coming off of a pretty rough 2 days. XL joins that list. Support is 763. It was your support on June 21st. It was your resistance on April 26th. This needs to hold above 763. Otherwise, it has room back down to $6. So 763 is the level you want to continue to close above. Your resistance is 953 from this low over here and this high over here. That simple. Roblox. Looks like there was some hidden bullish divergence, led to a rally, probably made a little bit of a golden retrace. Look at that. Look at Fibonacci. This is Fibonacci, right? There wasn't really any historical resistance there because it's such a new stock. But on this rally, from its previous swing high to swing low, it literally touched the 618 golden retrace and pulled back there. You know, those are you know, this is a perfect example of Fibonacci and why you want to be using it. So it hit a common, you know, retrace. It's pulling back now. It's above 78. Anything above 78 is still good, but obviously could retest it if it wants to. Resistance is 104. Previous all-time high. That's all you can do on a chart with such little data. App Harvest, APPH. Looks like it was got a little bit too deep for like a bullish bat. Kind of just went down to that same level. I think it's good above 1430-ish. You could see that 1430 level was your support back in December of last year. Almost became your support on March 5th when the S&P was at the bottom of the wedge. You just want to hold above 1435. Otherwise, your next support after that would be like 1180 or 1170. I don't see much of a pattern or divergence. ME23andMe. It broke out of really the only pattern on this chart. So that was a neutral pattern. It could have broken out either direction, but it broke out to the downside. Now it's pulling back. Not much I can do on these new IPOs. Like I always say, I need something with more data for higher probability. I mean, I don't know. You know, this is a support, that could be a support. That like, it's just like, there's just so many little pivots that could be supports, but also there's just not enough data for super high probability on technicals. With such a new stock, it's just probably the actual fundamentals of the company that matter more, you know. Technicals work out the best when you have more information and data, and I wouldn't say less catalysts, but obviously catalysts override the technicals. BBIG, you want to get back above 416. It's kind of choppy. If it breaks that 50% retrace, which it kind of did already, it just doesn't really look like a cup and handle anymore. Again, on a handle, you don't want to break a 50% retrace and come more than halfway back down from your low to high. Maybe some classic bullish divergence developing on the 4-hour on the MACD. I guess it's finding support now like 377 from this low and this low and this low, so you probably just want to hold above that. And eventually there's a gap fill to 474-ish. I'm gonna look at the chat in like 2 minutes. I just want to finish doing these tickers. T-Mobile, maybe a little bit of a bull flag over here. Already broke out of it. Hidden bullish divergence on the daily. T-Mobile looks pretty good. Again, there's obviously much better areas to be entering. But it looks like it's just maybe like a little bit of a bull flag in like this upsloping channel. So really anything above like 135 on T-Mobile, there's that swing high, this little support. Anything above that looks pretty good. So yeah, T-Mobile definitely having a very, very nice run after the COVID crash. I mean, really, yeah, I mean, it's still just continuing to do well. Ever since like 2011, it's just been making higher highs and higher lows. So it's just continuing to do that. So yeah, it's T-Mobile. CVS, looks like it's breaking under a support, which was like 83.67, used to be a resistance in last summer, last fall. On the 4-hour, there's not much divergence. On the daily, hidden bullish divergence is eventually possible. You need your MACD to go back over to green. Probably just a little bit of a downsloping channel over here. That's really all you can do on that one. You would like to see it get back above 83.67 though. So yeah, next one is Disney. Might be breaking out of this supply line, back testing it. That's pretty good. I think above 171, Disney looks pretty decent. It even made a higher low on the 4-hour. yeah, as long as Disney can hold above 171, it looks fine. That's really it. It broke a supply line. That's really all you had to work with. You could probably even look at like a falling wedge if you ignore that like fake out. Broke out of a falling wedge, you could probably just use Fibonacci to target it. Pretty simple chart right there. Looks fine for right now. Not too volatile lately. Clean spark, down sloping channel, no divergence on the daily, on the MACD, or on the 4 hour. You made a higher low on price and the oscillators. That's just bearish. That's bullish convergence. It's not divergence, it's just convergence. Same thing on price and the oscillators. So 15 bucks is your support. What was your high like last September? It's trying to flip into your support now. 200-day moving averages are like 19, 20-ish. Gap fill is at 28 bucks. That's obviously way higher than the current price. That's really it on that one. Palantir hit both targets of a premium trade. Look how perfect that second target was. And again, it might just make a higher low and continue going higher, but it was just a trade. So hit the second target of a premium trade for a 43% gain, pulled back, and now it's testing support. 2420 is your support. It was your previous resistance at the end of April. It was supported a couple times historically, not a huge level, but it's the closest level to the current price. You just want to continue closing above 2420. I think there was some 4-hour classic bearish divergence playing out. Yeah, so oscillators were a little bit overbought. Now you're getting a pullback, and you could see here again. You know, this is a 10% correction, but look what happened to the RSI. It went all the way from 80 down to 37. So this is what I was saying earlier, especially relating it to the tech stocks. You can see the RSI really dip down pretty harshly on just little pullbacks, which is actually what you want to see. That kind of shows that, you know, the price is reacting pretty well to overbought oscillators, and the RSI is just resetting, and then maybe you could show divergence in an uptrend, right? Which is ideal for people who are holding this for the long term. Next one is TSM. Really choppy. I'm not too sure. I mean, maybe you try and look at this. I wouldn't even say an inverse head and shoulders because that was realistically the same low right there. But maybe you try and look at it like this. I don't know. Something like that, maybe. It's a little bit choppy. I mean, 121 is a resistance. It was support in January, resistance in April, resistance in June. 122 is like your resistance. In terms of support, I'm not too sure. I mean, you have a gap fill at like 114.5. That was a bullish pin bar candle, so you probably just want to hold above this swing low. That's really for TSM. So yeah, let's get to 30 likes right now for the people still in the stream. I know that was a little bit of a longer run of charts, but we had a good amount of take requests. So let's get to 30 likes right now. Hit that subscribe button, join the Discord, links in the description. All right, these will be the final. All the tickers that are currently in the chat, I'll just finish them and then I'll probably get out of here. So no more ticker requests anymore. Let me just add what I already missed, and then we'll probably close it up after that. We already did BFLY. We'll look at gold. There's a lot of different gold tickers. Max, I don't know if you want me to look at Barrick Gold Corporation, if you want me to look at actual gold spot price, gold futures, GLD gold ETF. You just said gold. If you just want to look at gold, we could just look at the gold chart. Correct me if you don't want to though. On NYSE. So is it this one, Barrick Gold Corporation? Let me know if it's Barrick Gold. Swing high, swing low just means a recent move. I'll show it to you in a second. All right, that'll be the final ticker for the night, USAS. But yeah, silver and gold look, from a technical standpoint, silver and gold both look very interesting. They look bullish. Mitch Ray was looking at them earlier on his Twitch stream earlier. I've been looking at gold for like a month now. Gold and silver really, I'll show you the chart, so we'll look at both of them. But I've been looking at SLV and GLD, which is like the easiest way for me to trade them or trade options on them. So we'll look at them in like one run. But yeah, we'll get to them in like a second. Let's just start with charge point. Actually, let me see if I missed. I need to answer a question in the chat. But yeah, after that message that Chatter Freeze just put, no more ticket requests. Did I miss any like questions? Max says vibes for the FTM here on grad school eve. Have to keep supporting learning. Really appreciate that, Max. All right. What was it gonna? Oh yeah. So Jordan says swing low and swing high just means a recent move. So I've this chart right over here. So these red circles are your swing highs. These orange circles are your swing lows. So the swing high is pretty much the highest, or like in like the midterm to short term, it's the highest price you run up to before a reversal. Swing low is the lowest price you drop down to before a reversal. Typically, if you want like a mathematical way to confirm swing highs and swing lows, it's a 23.6% Fibonacci retrace. So for an example, if you want to confirm that swing low, you go from your previous high down to your low. Once it crosses this first red Fibonacci line, the 236, it makes this a confirmed swing low. On the flip side, if you want to do it for a swing high, you go from your low, your previous swing low, to up to your swing high. And once it breaches that 23.6% Fibonacci retrace, is when that becomes a confirmed swing high. So yeah, those are your swing highs and swing lows. So yeah, charge point. It's at a choppy area. You know, it's trying to break out. It got above it. Now it's trying to back test it. That high from the beginning of April, it was even support on December 15th of last year. You just want to continue to hold above $31. As long as you can do that, you're fine. If you cannot hold 31, then there's room back down to like 28 bucks, which is your 200-day moving average. If you can hold 31, next major resistance would be like 38.50. Not much divergence. Maybe a little bit of, no, not much divergence on the daily. MRO making a nice move. Historically, if it can cross above 14, really if it can cross like 1450-ish, there's a lot of room to the upside. You could see that like 1450-ish, like this little zone right here, right? If it can break above that zone, which has been a low over here, a low over here, and then resistance over here, if it can break that, there's room up to like 19 bucks. But it has to break above like 1470 and hold above it. That's the big question. Can it do it? I don't know. You know, it's definitely making higher highs and higher lows. It's in a nice trend ever since the COVID crash. The oscillators are not overbought. You just got to get a little, you know, it's already showing resistance here. You can see. Why is it randomly showing resistance here for the past month? Why is it showing resistance in this area? It's the same major historical area. If it can break it, the run can easily continue. It could even get much crazier because that's a very important level. If it can't break it, your closest support is $12.37. Thank you for the 30 likes, by the way. UONE, hidden bullish divergence developing on the daily and the 4-hour. So MACD looks pretty good on UONE. Even on the RSI, you have divergence. So oscillators are implying a bounce. If you take that apart, if you take that aside from it, it's a pretty volatile ticker. I mean, 730 looks like the strongest level to me. It was your swing low in the end of May before a massive move in June. And then it used to be resistance all the way over here. So anything above 730 still looks fine to me. Obviously that gives you, on button, what's happening? That gives you about like a 15-16% room for error, which makes it a little bit tough. But maybe that divergence confirms, which again is really close. It actually is confirmed on the 4-hour. Hopefully, and you even had a 6% bounce on Friday, so hopefully this could be the start. Hopefully. Again, there's no way to know for sure. IDEX, I think it's bearish under 284. That was an important support for all of June. It broke it on Thursday. Again, a lot of these types of stocks, you know, the growth stocks, the EVs, they broke important levels on Thursday and Friday, and their 1 hours are oversold. So so what I was talking about earlier in the stream, the big question is, will the major breaches of supports on high time frames play out, or will the low time frame bullish technicals allow for a bounce to reclaim those supports? That's a big question that I'm looking at a lot of stocks this week. You know, Can these low time frames allow for bounces to get them back above supports, and then hopefully we had just had a fake out on Thursday and Friday. Otherwise, if not, we saw it back in February. If people want to bring the price down for multiple months, it's possible on these stocks, you know. So it's all about 284. You definitely want to reclaim it on IDEX. Got to reclaim it. You still are above the 200-day moving average, though. You still have supports under you. It's not the end of the world, but that's an important level. You know, $2.84. JetBlue, very slightly, but it is there. Some classic bullish divergence on the daily MACD. I think as long as it can hold above 16, it looks fine. And it is breaking the supply line. So again, this is a potential area for this thing to be for this thing to find a local bottom. Doesn't mean it's going to happen for sure, but it's if it can hold above 16, then it has room back up to 19. It kind of just, it really wasn't really for the past, like, honestly, this whole entire area has been pretty low volume after last June. Like, the volume just been kind of low on JetBlue compared to what it was before. I guess historically it's probably just the usual volume. You just want to hold above that $16 area. Now we're going to get into some metals. We got the Americas Gold and Silver Corporation. It's at a nice line, 147. If it can continue to hold above that, there is classic bullish divergence on the daily. This is, in terms of a reward to risk ratio, this is the lowest risk you would have had, or that you have on USAS technically since last July. It's at the lowest level. It's out of support. There is divergence. Does it mean that it's going to bounce here for sure? Absolutely not. Does it mean that there is a pretty decent probability? Yes. And it's already starting to bounce. So all I'm saying here, and again, this is something that a lot of new traders don't understand. I'm not saying it's going up for sure. I'm just saying that at this current level, there is a decently high probability for a bounce that's already starting. I don't know how long the bounce will be. And also, there's a pretty good reward to risk, right? If you just throw your stop loss right under that tweezer bottom, not really a tweezer bottom, but under that low from last week, you're risking about 9%. If you zoom out on the daily and you target your previous major swing high all the way up here and your 200-day moving average, I'm saying you could potentially be risking 10% to try and make 50%. That's a 6 reward to risk. So will this happen for sure? Will it go and see 241 before only dropping 15 cents? I don't know. I hope it does. And from a technical standpoint, the variables are possible, but at least I would like to see it retest this little resistance that it created in June. So it's pretty interesting. We'll see how that correlates to the actual gold and silver, which I'm not going to look at the actual ones. We're just going to look at the ETFs. But silver, Mitch Ray's been showing this on his stream for like over a month now. Pretty large ascending triangle starting like last September. Kind of looks silver kind of looks like Apple, except Apple just broke out. Silver looks like Apple like a month ago, right? You know, in September it kind of had a markdown. Now it's just been making higher lows very quietly for the past like 9 months. And we'll see what happens. You know, this is a long-term bullish continuation pattern. These are, you know, some of the most popular tickers in the world, silver and Apple, and these are very, very easy patterns for traders to identify and take longs off of these patterns. So not only does the psychology of this pattern give silver a bullish sentiment because it's making higher lows, also just the pattern allows other traders who notice this pattern to take longs. So it kind of helps out in both ways. It shows the psychology of it, and then it also shows a potential for other people to notice that. I hope that makes sense. Same thing for gold. I mean, not the same pattern, but potentially an inverse head and shoulders. There is hidden bullish divergence developing on the daily. There is confirmed hidden bullish divergence on the 4-hour. And it kind of looks like an inverse head and shoulders. You know, left shoulder over here, head over here, potential right shoulder. Again, it doesn't mean anything until the neckline breaks, but if it can just hold above 164, this is GLD, the ETF. If it can hold that, then we'll see what happens. But gold and silver are showing divergence and bullish patterns right now, which is pretty interesting. And another thing that was interesting to me was, I believe this was the last Fed meeting, the FOMC, or around then, but it was like the middle of June and we had like this gap down on gold, and I need to look up why that happened or what the news for that was, but that was also pretty interesting because it had just broken out of a descending broadening wedge and then just gapped down back into the wedge, but only to potentially create an inverse head and shoulders. The composite operator is playing some games with metals right now. It's very, very interesting. And then gold for Max, I believe this is Barrick Gold Corporation. Hidden bullish divergence on the daily is developing. On the 4 hour, not really. If we come back over to the daily, could this be a harmonic? I don't really think so. I see like an X to A. I don't really know where you'd put like a B point though, because it looks like this to me. You know what I'm saying? So that's all it really looks like. I don't see like a higher high or a lower high up here. I just see like one high up there on the daily. So I don't know about a harmonic that looks clear, but I guess $20 is an important level to hold. 20 bucks was your high back in August of 2019. Wasn't exactly your lows in March of this year, and yeah, it fell under it, but eventually did bounce back above it. So you probably just want to hold above 20 here. There is a gap fill, I guess, from that same exact day to like 2250-ish almost. And yeah, futures flat, Bitcoin flat. I have no clue what this week will be like, but we'll find out pretty soon, or at least we'll start to see pretty soon. So yeah, I hope you all had a good weekend. I wish you all a great week in the market. And yeah, thank you for watching the stream. Thank you for the 32 likes. Join the Discord, links in the description. I'll be live again tomorrow night at 9 p.m. EST. I'll see you all there, and peace out.
Trying to find what's golden, never gonna hold her down. I'm chilling on the sofa, I don't want a yoga, I don't want to life right now. And ooh, see outside it's changing seasons, but I'm burning all my daylight sleeping. I want you to know I'm still trying. Headed to a plane, coming for a week or two. Gotta clean my act up, I don't wanna act up, so I gotta find my groove. Ooh, good vibrations swirling around me. Wow, so why does changing hurt so badly? I want you to know that I'm still trying. Scruff gone, gotta shave it. Get my diet up, no more eating bacon. Get a bathing, bet it feel amazing. Climb up from the cave I created in my basement. And even if I'm slow